a second, y'all. The word, what's good, bro? Yo, 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 yo. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall, your social media insurance broker. And I've returned today to whap and tap on your head with another ADH12 solution. What's up, babe? Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. Today, I'm doing a training session with some of the agents who are new to my team because part of the thing that you have to do is train people. So bear with me while I hop on this Zoom. I'm just going to share my screen with y'all or show me to y'all, but y'all at least hear the conversation. Give me 1 second here. Let me just join this Zoom. And that's going to be part of the program for today. It's going to be brief. I'm just going to show them, kind of how to do illustrations because I found that when you're dealing with a lot of financial professionals, they don't know what the fuck they're doing in terms of doing the illustration or the proper design of a policy for you. They don't know their ass from their elbow. So it's really hard for them to give you advice or teach you or train you anything as a client. They're just kind of taking an order. There should rarely ever be a situation where you come to somebody and say, hey, Alonzo, how much is $500,000 worth of life insurance? And then I come to you with a quote. Because I don't know what type of life. That's like you going to the doctor. Hey, doctor, how many milligrams of penicillin should I take? For what? I don't know how many milligrams of penicillin. I don't even know if you should be taking penicillin. Because I haven't done physical makeup of you. So it's the exact same thing when you're looking at your life insurance. Give me 1 second here. Close this out. Go back to my inbox. The Zoom session should be starting any minute. And let go. Let's see. So 601. Okay. Good afternoon, Charles. How are you?
What's going on, all right?
Doing all right. Oh yeah, I gotta get super fresh now. I'm gonna cut the whole crop off for tomorrow.
Yeah, I'm just gonna go to the barber today.
For what? You look great.
We'll get it lined up.
Oh, you gonna get the beard lined up?
Yeah. Look, I just got an email that they terminated an agent due to like the repayment plan.
Jeez.
Wow. They serious. Wow, that's crazy. They contracted her. They came back, withdrew the offer.
Wow. That's insane.
I have to give her a call.
But doesn't that just mess up their credit? Like it doesn't. You go into collections with those, right?
Vector is something kind of like the MIP, and Vector is kind of like the MIP. Hold on a second. Give me 1 minute. Let me just send these guys a note.
Yeah.
Where are they?
They the ones wanting the training. Change my background up. We'll keep it all company compliant. It's easier for folks to figure out that way.
You ever get your business registered?
I have not done that yet. I intend on doing that actually this year. Because I don't want no problems with the tax man. You know, you already know I don't want no problems. Nicole will kill me. She'd be like, how you gonna let me work here and you screwing up? You gonna mess around and mess me up. So I ain't gonna do that.
Yeah, you can't. She'll be. Yeah, they'll definitely come on her. She'll be guilty, just by association with you.
Yeah. So I don't wanna cause no kind of rifts. I'll be right back, Charles.
Yeah, I just sent them an email. So.
The word. Yeah, he says that was one of the things that I didn't get properly trained on. They were more concerned about me getting in front of people, but when I didn't know what I was doing. So part of what it is, the word is, they don't just want you to get in front of people. They want you to get in front of people with them. Prime example, I have an agent who works with me. We have an appointment set. I said, listen, I'm glad you set that appointment for, the Monday at 6. But when you set the appointment, make sure you let me know, because I need to be on at least your first 10 appointments to show you what to do. The reason they don't exactly train you on what to do is because they don't really have anything to train you on to do. What we're doing here, though, is these are agents who have a little bit of experience. They've written policies, but unfortunately, they're not doing exactly what is necessary to get policies issued or written right. Because what a lot of agents do is, we don't have proper training, and then situations like this arise, right? I'm taking time out of my day for free 99. I'm not being paid to train these people. I don't get an override off of the business they write. I'm just doing this out of the kindness of my heart. But that's another thing you have to be concerned with. Is this agent just writing it out of helping you out of the kindness of your heart? If they're your upline, if they've brought you in, or they're your team manager, your sales manager, they need to train you to make sure you do right, because 11 times out of 10, they get an override off of the business you write. But when they don't, it's very, very important that as a newer agent, what you have to do if you really want to succeed in this business is you have to be proactive. You have to chase down the agent that's writing a lot of business who don't need you for nothing, because they're writing their own business, and say, hey, look, Bob, I see you're doing great. I set these appointments, but I don't know exactly what I'm doing. I don't mind splitting the commission with you 50-50 if you'll show me what to do. Because I promise you guys, 50% of a watermelon is a hell of a lot more than 200% of a grape. And that's where a lot of this ends up getting messed up in this industry. What ends up happening is so many people get in this industry with false promises. And you can make $1 bazillion. I was talking to a gentleman of a kid I know who made $250,000 selling final expense, but he wanted to get back into the industry. He was like, yo, you got a company code so I could do pre-licensing? I said, yeah, but if you're going to do pre-licensing, you're going to need to be on my team, bro. I'm not going to bullshit with you. I know you know how to write business. So if I let you get back in this game, my nigga, I'm gatekeeping. You got to be on my team. Straight like that. Because I know he's a producer. He was like, oh, well, what's the commission percentage? I said, well, it's, street level 50%. Street level isn't 50%. Street level is 50%. What happened is FFL, WFG, PHP, and all these bullshit 3-letter companies come out and tell you, we'll give you 100 bazillion percent. Well, guess what? 100 bazillion percent of zero, ladies and gentlemen, is what? Zero. 50% of 10,000 is 5,000. Would you rather 100 bazillion percent of zero because you don't know what the fuck you're doing, so you're not writing any business, but at least you can say, I get 1,000,000,000%? Or would you rather say, yeah, I only get 50%, but I write, $100,000 worth of policies, so I make $50,000, right? Again, 50% of a watermelon is substantially more than 200% of a grape, right? Because if you take a watermelon, average size watermelon about this big, and cut that in half, you take a grape and double it. This is the 200% of the grape, while this is the half of the watermelon. So 50% of a watermelon is still substantially more than 200% of a grape. Right? Now, when we learn like that, you know, those things they resonate, right? And they actually work for us, right? Like the word, if you want to get back into the biz, man, listen, holla at your boy. I'm definitely willing to work with people, but I tell people this: listen, you get as much attention as you give me, and you get as much training as you give yourself to get through me. So what do I mean? If I call you and ask you to do something, trust me, I've been in this business 15 years. Anything I'm asking you to do is not something that I have not done myself, right? From the fucking sweeping of the floors, cold calling, door knocking, fucking writing policies, entering information into the CRM, building advertisements, from rooter to tutor. I've done it all. When you get to a certain level, there's certain shit you won't do anymore. And so I'm at a certain level where there's certain things that I don't spend my time, energy, and effort on. I get agents who are newer into the industry. Hey, listen, you're a newbie in the industry. Do my cold calls. Why are you doing my cold calls? Because, hold on, why the fuck?
Alonzo, you there?
Yeah, I'm here. I'm here.
Yeah, he's logging on now.
All right.
There we go. Okay.
All right. So yeah, folks, give me a second. My agent just hopped on, and we will take y'all through some of this training.
No Carlos?
Yep, I'm here. I am muted.
Hey, what's up, Carlos?
You good?
Thank you. How you guys doing?
All right.
All right, great. Hey, you know if Vicente will be joining today or?
I don't think he is because he has this thing that he does in the racetrack. He's a racetrack trainer. He trains animals and stuff.
Oh, he is. I didn't know that.
Yeah, he has a lot of good customers from that business there.
Oh, I didn't know that.
Mm-hmm.
All right, good. So it's just me and you. I wanted to introduce you to Alonzo. You know, Alonzo is one of our top. Well, this is our top life producer and also annuity producer.
Nice.
And he's gonna help you. You know, I asked him to join us to run illustrations.
Mm-hmm.
So I don't know. Hey, have you heard from Gilda? Or because I sent her. I didn't know if she was gonna be able to make it or not. I sent her optional.
No, I haven't heard from her.
So what we'll do today, we'll give you a demonstration on how to run. I mean, there's a lot to cover, but we'll give you a demonstration on how to run a basic term illustration and also a basic whole life illustration on the Emeritus portal.
Okay.
Right.
All right.
And then we'll see, you know, if there's time. So we'll do the demonstration for you. You know, Alonzo will do the demonstration for you. And then if there's time, maybe you can try to run one. You know, it's always best because you can watch me ride a motorcycle, but you know, it's different when you get on a motorcycle, right?
Yeah, absolutely. Yeah, you always want to know how to do it. Yeah, it's the first time.
That's important. So you should be able to get into your computer and do a quote. So we'll start you a basic term and whole life, and then because IUL and annuities, that's a whole nother animal. We can do another call, you know, to go on that. So we don't want to overwhelm you with, you know, every tool in the toolbox, you know, just yet. So, you know,
that course you did the other day, that was an annuity, right? The one that I saw, that was on annuities, right? The one that like the training that you had.
Oh yeah. Actually, just remind me. I gotta send out the. That's on my to-do list. I gotta send out the recording. Was you on the call? I don't remember.
I was on the call. Yeah, I was on the call. I was just basically listening. I was just hanging out in bed, relaxing.
Yeah. So I'm gonna send out the recording of the annuities, because that's a whole nother system to get into the illustration. You know, to run that. And then how to apply for the policy. So how did that call go last night? You was with the I sent you the Royal. Did that go well or?
Wait, say that again.
I sent you the Royal Arcanum stuff. How did that go?
I mean, I looked at it. I mean, I might go the other route to see if she can get something else because she's a friend of mine.
Okay.
And I just had it. Yeah. So I kind of looked at it and I'm gonna sit with her.
Okay, good. So with that, Alonzo, you want to just take it from here and share your screen?
Yeah.
And Carlos, if you have any questions, feel free to interject. And there's a lot to go over. So, but we just want to at least show you how to get to the, one part of the sales process is to do the illustrations. So, okay, great.
All right. So, I don't know how familiar you are with the back office or the homepage of Producer Workbench. How familiar with it are you? Zero. Okay.
He's got basically just signed up for everything, so nothing right now.
You just did your sign up.
So you registered already?
I actually didn't know.
Oh, you didn't register yet? Okay.
Okay. So the first thing you're going to do is you're going to register for Producer's Workbench. Once you've registered and gotten your password and everything, you'll be able to come here to the back office. Your most important portions that and I also see, I guess you do taxes. Are you an EA or you just have your P10?
No, I own 3 tax offices. I don't have I'm not an EA though.
You hold your EFIN.
My wife is the EFIN holder.
Okay.
Yeah.
No problem. As you can tell, I'm very familiar with the tax world as well.
Good. That's good to know. Yeah.
So,
Alonzo's wife is an IRS person.
Oh, nice. Very good. That's nice.
Yeah. So, whenever I see people with taxes, I'm very, very, very careful because, she might put the kibosh on you.
Well, you know what? That's why we're very, with Liberty Tax, which is franchise, we're very compliant and we have to upload a lot of documents. It's more time consuming than it used to be in the past.
Yeah.
But it's better. It's for our own protection. We always, due diligence, everything has to be there.
You're on the Liberty franchise. Cool. That's where I got my P10.
Oh, nice.
Yeah. So I technically I can prepare. I don't bother even dabbling into that, but it's good for cross-selling. And knowing things like tax code. So, especially in the business that you're in, eventually you'll want to learn these higher end concepts. But let's keep it base level. What kind of experience do you have with insurance?
Well, right now I've been working for Combined Insurance for the past 5 years. So we do supplemental benefits. We also offer, small whole life policies. Nothing that my clients really, I would really want to offer on my client side on the life side.
Their life portfolio is not the greatest. I'm very familiar with Combined. I think I have a contract with them.
Yeah.
I don't do any business with them, but if I needed, actually through CG Wealth, I wasn't aware, but we actually have a carrier who probably has exactly the same, if not more than them. But let's get you familiar with Emeritus Producer Workbench. So, for starters, this is your first page that you're going to see. The important portions that you're going to want to look at are obviously here at day-to-day tasks and here in the middle at your alert center. At your alert center, you'll see your unread messages, which is generally any communication that home office is having with you, generally with issued policies. You'll see new business issued not paid, which means you haven't been paid on the business that's issued. It's kind of self-explanatory, right? You'll see new business issued paid, which is kind of self-explanatory as well. It's new business that you've issued and been paid on. You'll see new business pending, so anything that you've put in the hopper that's waiting to get issued or what have you is going to be there. So that's another section that you're going to want to concern yourself with. The other section you're going to want to concern yourself with is the recognition production. This is where you'll look at those points that you're looking to earn to get on the, like the trip to Hawaii or what have you, right? So that's where you'll be able to qualify, and if you show your number, you'll see how close or how far you are. The next things you're going to want to concern yourself with. You had a question?
No. I'm listening.
Okay. So the next thing you're going to look for, depending on your licensure, you're only insurance licensed or are you securities licensed too?
No, just life, health, and accident. No security.
So right now, insurance. So you're going to want to look at prepare for a sale. That's going to bring you to our paperwork and stuff. The most important portions you're going to, and then calculators is something that a person such as yourself will eventually want to get around to. I'm trying to go slow here, so now I'm going to get to the meat and potatoes. The two most important tabs on this page are create an illustration and go to eApply. Okay. Those are the two most important tabs on this whole thing here. Okay. Number one is create an illustration, and that's what we're going to go to now. So first you want to click to create an illustration. It's going to bring you to this second page. This second page, you have a few options. Okay, as you can see, they have Illustration Pro for DI because their disability platform is a little bit different. You're not securities licensed, so you don't need to worry about their variable annuities. And then this in-force illustration is only for policies that have been in force for at least a year and they want a revision. You want to make sure, though, you'll see there's two tabs here. There's the software downloads, and then there's the web-based illustrations. Do yourself a favor. Always go to the web-based illustration, so you'll see that this box is white instead of orange. If I go to software downloads, you see software downloads is white, which means that now I can download Life Designs. That's a waste of your time. You want to make sure that you go to web-based illustrations and click Launch Life Designs now. The reason why is you've heard of the prime rate, correct?
Yep.
Okay. As you know, technically it changes every Wednesday by noon. However, those illustration things, they update daily on these software. So instead of having to download it every day, just go online, do it online. You can literally do it from your cell phone, and you'll be able to get the most accurate, up-to-date illustration possible. Make sense?
Yeah.
Okay. So once you've clicked here, it's going to tell you Life Designs. It'll have your agent number. You'll click login. It'll bring you to the next screen. In this next screen, it says clients and cases. If you've not put a client in there, obviously, when you click on clients and cases, it's not going to be as robust as mine because obviously you don't have anybody in there to put in there, right?
Alonzo, create like a fake one, you know,
yeah,
just for illustration purposes.
I'm going to do that right now. So for example, you know, we don't have any in here right now. So let's say you're completely new. So you would have a brand new one. So you click new. Now it's going to bring up the information for you to enter. So you're in New York?
Yes. Yeah.
Okay. So we're going to put Donovan Mitchell. Donovan Test. Okay. And he's going to be, I don't know, let's see, 01/15/1986.
Or Carlos, do you have an actual illustration you want us to run for you while we're in here?
We could use. I don't have. I can get her information, but I just don't have it handy. But it's fine.
What's the age?
Okay.
We'll just put test client. Approximately what is her age?
Nicole said she is 52. 52. Yeah, I do have a couple, but they're in the office. But
that's all right.
Let's say 52.
We're gonna say they were born February 27th, 1972. 52 years old. We're gonna use.
Actually, let's try. I got somebody who's 60. She just told me I need to get her a quote. She's 64. Put 64 in there. I don't know what the date of birth would be, but
yeah. So we're gonna say February 27th, 1960.
Yeah, something like that. Yeah.
Okay. Now we're gonna click. Once we enter their information, the more information you have, the better, because it'll make the illustration look nice. But you don't have to have their address, city, state, phone. Well, you need their state, but you don't have to have their address. But let's just say we have their address for argument's sake. Floor 2, Bronx, 10459, 212-212-2222. email@email.com, right? So once you would enter all that information, you'd click return. Okay. Now it says test client, right? So now you don't have any cases to show. So if you were to click show cases underneath, nothing would come up. So you go to the right on the bottom, and where it says new, you click new, and it says illustration or basic illustration. Please always start with basic illustration.
Okay.
Okay. Once you start with basic illustration, it immediately brings you to an IUL. We don't want to start with an IUL. So if you'll notice here, there's a multitude of different verbiage here. Issue date, and then it says plan type. So the first thing you want to do is move from plan type from indexed or universal to whole life and term. Because initially we're doing the term illustration. Right? Now, when you wanted to look at the type of insurance policy we're offering, you go to the plan. So in this instance, we're looking at a term policy because we're going to start with term. So you go to the, now as you'll see, there's a multitude of different types of whole life and term in here. We'll get into that in a later training. I want to keep it as base as possible for now. So the first term we have is the value plus term. And if I'm going too fast, stop me because I'm very adept at this, so I go very fast.
No, it's okay. I got you.
Okay. So how much coverage was she looking for?
Let's say give her like 100,000 in coverage.
Okay. So 100,000 in term is here nor there. But again, due to her age, it's likely going to be fairly expensive. But does she use cigarettes?
No.
Does she have any health conditions?
No.
Okay. Do you know the last time she's been to the doctor?
Probably within the last month.
Okay. The reason I ask that is not only does it help the underwriting team, but we as agents are field underwriters. So it's our job to make our job easier by asking these questions up front. If you just take, and people are going to get frustrated because a lot of carriers don't have us do this. A lot of carriers have you be an order taker, which, yeah, you'll make a few dollars, but you'll get an agent like myself who will come destroy your book of business and take all of your clients. So you want to also kind of give them options. So if you'll see here, there's 4 options available. A level term for 1 year, level term for 10, 15, or 20 years. Due to her age, she can't get a 30-year term. So you have a few different options. Okay, obviously here you can change their class. So I always illustrate standard. Let them, because you don't want to pull the bait and switch. What a lot of insurance carriers tell you to do is quote them preferred plus is the best price possible. Yeah, the problem with that is when they run that MVR or run their prescription history and they see one prescription and now that price triples, it's a really hard thing to go back to this client and say the price tripled. Whereas if you start them at standard, like I just had a client who I started at standard, she did the paramed exam. Her health came back preferred plus. That premium went from $125 a month to $84 a month. Do you think that person is happy or upset?
It went from where to where?
It was $125 a month at standard. She came back, her health was preferred plus. So now the premium went from $125 to $84. Yeah, do you think she's upset? And she basically has the same, she literally has the same coverage for less dollars.
Right.
So, you know, you want to start people at standard and then bring them up. So the next thing you'll see here is you have 10, 15, and 20-year options. Whenever I quote a term policy, I do all 3, right? So you simply, if you want one version, you just let one button be clicked. If you want 15 or 20, you click all 3 buttons, right? Okay. Now for this one, you would click preview. Okay, and it'll actually pull up the illustration. So, like I said, test client, their address, their email address, their phone number. That's what I just put in. As you can see, this is prepared. This would be your information. Okay, and then it'll go here and it'll tell you, okay, for a 10-year term, it's going to be $650 a year. For a 20-year term, it's going to be 908 a year. And for for a 15-year term, it's 908 a year. And for a 20-year term, it's 1244 a year. If you want to break that down to the month, I can do that as well. Right? Just got to do a little math. So 650 divided by 12, you've got $55 a month. Right?
Alonzo.
Yes.
You don't even have to do that. If you scroll down a little bit.
Oh, wow.
It gives you the monthly premiums right there.
Well, that shows you how much term I sling, huh?
Oh, wow. So 56, 78, and 107.
Yes.
Oh, but the total is actually what conversion, then it's actually 56. There's a conversion extended, whatever that is.
Yeah. So the conversion extension allows them to, if she wants this policy, and then at the end of year 10, your term policy is supposed to be done. But you can also keep it. But if she keeps it, she's paid almost $6,500 for the last 10 years. Year 11, she's going to pay $6,000. But the conversion extension allows you a longer time. I believe it's till the end of the term to actually convert all or part of that policy to a permanent policy. Okay. Am I inaccurate in that, Charles?
Yes, the conversion, that just because this is temporary. You see, like that 10-year, you see where the premium goes from 650 to 6,000 in year 11, and you see every year after that it continues to grow up, to go up. So even like in the 20th year, you see the total premium is 122,000. That decline was spent. And with Ameritas, these policies go up to age 95. So if they continue to pay that premium to age 95, you see, they would have put in a total of 629,000 into the policy. So the conversion option, and at that time they'll cancel it, or the company will cancel them, and then they'll be out of $629,000. So the conversion privilege that gives them the opportunity within that 10 years to get out of this contract, or at least a part of it. You don't have to convert all of it. Client may say, I just want to convert 25 to a permanent policy, or $50,000 policy. In the 15 years, same way, you see the premiums guaranteed is locked in for 15 years, and then after the term period is over, it balloons, and then the 20-year, right? So the conversion privilege is saying, you want to convert, you could convert all or part of it to a permanent policy. And with that rider, I automatically put it in because you need it. Because without it, you have like 3 years to convert. So somebody might, 5 years decide they want to look, they might have other things on their plate right now. Or 5 years from now, they get ready to retire. And they can convert without evidence of insurability. Like, you run a past me, say, this guy has, diabetes and a stent, when the conversion rider on there, that doesn't come into play. You don't have to do a physical, it's none about business, what type of health they're in. So you can convert guaranteed up to the original face amount. So that's what that rider does. It protects their conversion privilege.
Now, this illustration that I did for you was without any riders added to it. So if you want to add riders, if you'll notice here, you see life, portraits, homes, clients, and cases. Concept, we'll get to that in the future. We just want to, at least have you figure out how to illustrate. So the next thing you want to do is riders. So one rider, wow, you can't add it at her age, is the waiver of premium. You generally always want to add that to all your policies as a matter of practice. Because the worst thing you want is somebody gets sick or injured, can't go to work, and so obviously they can't earn an income and pay their policy. And, they might have a disability, a critical illness, a hospital indemnity, whatever they have, but those still have an elimination period. So while you're waiting out that elimination period, you still need to pay for your premium. So it'll tell you this rider provides for the premium to be waived on the base policy and all riders during the continued covered disability of the insured, right? So then you want to add an accidental death benefit if a person wants a substantial more amount of coverage. Say she wanted, 200,000, but already the 100,000 is expensive. Now it's only going to go to age 74, so it's only going to be a 6-year thing, but you can add that. if you'll notice, the conversion extension automatically comes on the term, and the terminal illness automatically comes on the term. At her age, they don't expect her to have children, so there's not going to be a children's rider. But now, if you preview this again, it'll be slightly different. It's a little more expensive now, right? So now it's $56.12, but then the accidental death benefit is $10.76. On the 20 years, she can't get the accidental death benefit.
Wait, what happened to the terminal illness rider? I thought that was included.
That's automatically there, yeah.
Is it where? I didn't see it.
It's built in, but it's free.
It's built in. It's right here.
Oh, is it? Oh, okay, that's nice. Oh, it is.
Terminal illness right here for you.
Oh, it's an accelerated portion of it. Okay. It's just basically an accelerated. Okay, gotcha.
Yeah, so you're not going to see it, but if you read the entire illustration, you'll see it. So that's here for you. Yeah. Now, your initial monthly...
And that's no cost. These other ones...
Yeah, these other ones are cost.
Yeah, the accidental death benefit. But that's still not bad. An extra $100,000 for $10.76. Not too bad.
Right.
No, not at all.
But mind you, this is only going to last her for 6 years. So if she doesn't die by 69... age 70, the price drops back down to the traditional because that accidental death benefit falls off.
Got it, right.
The difficulty is, and we get this, I'm sure, all too often. Clients come to us at the last, hey, I'm 75 years old and I have $10,000. I want to invest and get $1 million tomorrow. And you're like, you could go play lotto. Because that's the only way you have a possibility of getting there. Okay? So that's basically the long and short of term policies. There's not too much.
Just go back to that illustration. I just have one question.
Yeah, I was going to say before you move, see if he has any questions.
I have one question. Let's go scroll down, and this is where I was a little bit off. So let's look at the 10-year, right? So I know year 1 to 10, starts at 774.
Year 1 to 6, yeah.
Yeah, the total average is $7,232.
That's the total of 7,232. The average is 723.
The average is 723. Okay, and then in year 11, it goes. And I understand. I mean, now is year 11. She had the what was it called? The extended. What is it? The
term conversion rider.
The conversion rate. So in year 11, her annual premium is going to be $6,000, right?
Yes.
And
that's if she doesn't convert.
That's if she doesn't convert.
She doesn't. She chooses to leave it as is with the premium.
Oh, she'll leave it. So she has the option here at year 11 to convert it to what? A whole policy?
No. The conversion privileges are within the term period.
Within the first 10 years.
So we're saying this illustration is assuming that she didn't convert and she kept the policy the way it was. And that's what the premiums would go to. Like in year 11, year 12, it goes up. And that's the thing with term. It starts off cheap, and a lot of clients, when you speak to them, I'll show you that their agent didn't go through, because she just see, hey, this is $56, great.
Yeah.
Right? But then in year 6, now you need to calculate it, Alonzo. What is 6,000 divided by 12? That's like $500 a month, right? Am I correct?
Yeah, 6,000. That's about $500 a month.
Yeah, so we'll go from $56 a month
to $507. Yeah.
And so what's the
and no cash value. You're not getting any of that premium back. If she cancels the policy, that whole $7,000, all the money that she put in there is down the drain.
Basically, yeah.
Yeah, it's down the drain, and then you don't have a policy.
So what would it be the option? Her options in year 11 then?
Nothing.
Well, she has to convert it.
And convert it to?
Either a whole or a universal, a permanent policy.
Oh, she can convert it, and then where do we get the rate? At that point, where do I get the rate?
That's what Alonzo's going to go to that section in the middle.
Got it. Okay, perfect.
So conversion, conversion is a little bit different. You do have to work with home office because it's going to be an in-force illustration. Usually, I just did one. And sometimes in this particular circumstance, it's likely not. Due to her age and what's called the cost of insurance. But sometimes a client will even get a refund, and they like that. They'll get money back, even though they're paying more for the whole life policy. So
got it. Okay.
Now we're gonna go from term, and we're gonna go to a whole life. Let's do value plus. We'll start with that since we did value plus term. So now comes into play where you need to understand the product. So that's where it's important to come to a lot of the product trainings or take advantage of Emeritus EDU, because there's nowhere in the world, Charles and I can sit here with you every day to explain to you the ins and outs of each different type of policy. It wouldn't be good for any of us, because you wouldn't be out there, with your clients, you'd be out there learning. Right. So the value plus is basically the lowest barrier to entry. Are you a fan of cars?
Yeah, you could say pretty much.
Okay.
Yeah.
I'm a Mercedes fan, right? So I would equate a term life insurance policy to like a CLA class. I'd equate a traditional whole life policy to a C class. Then you've got a 10 pay, which would be an E class, and an IUL properly funded, which would be an S class. Can you tell I like Benz?
Well, what happened to the AMG?
Well, the AMG would be a VUL, which would be a variable universal life.
Okay, got it.
Okay. Yeah, bro. Listen, I'm into them all. But an AMG you can get on every model. So you could get an AMG CLA, so on and so forth. So that would just be the riders that you would put onto the policy. But great question, right? So when we're starting again, everything else you want to leave the same. Now, for this particular client who's 64 years old, $100,000 death benefit at this point is going to be fairly expensive, right? Print to age 121. Okay. Now, if just as it stands, okay, you can input the premium amount or the face value. So if someone says, hey, I have a certain budget, you can actually work with that. Okay? Now, again, you'll have riders. There's a multitude of different riders with this. Before I go to riders, however, I just want to show you how to illustrate a traditional policy. So you've got just basically everything else that we've did with the term, except there's no option to click a button for the years of term. Follow me so far?
Yeah.
Generally, where it says mode, you want to put it monthly, because most clients see things monthly. I don't bother with quarterly or semi-annual at all. You're either going to pay once a month or once a year when you're dealing with me.
Got it.
Emeritus doesn't have quarterly, by the way, only like to enforce, like if they have a client, if you come across a client that's already paying quarterly and they want to continue to pay quarterly, but for new clients, they don't have quarterly. That's only for enforce clients.
Okay. So you click preview. And now this is going to be your illustration. So you're not familiar with how to read an illustration as of yet?
No.
Okay. So up top, first things first, as you see, it's $288 a month, right? Most people, oh my God, that's expensive. It's relative. Okay, so again,
that's actually cheap.
Yeah, for a 64-year-old.
Very cheap. Yeah, that's a very good rate.
Yeah, and this is running to age 121, so basically double her age now almost, right? It has the cash value. Yes, there are non-guaranteed elements of the policy. It'll tell you the loan interest rate, which is currently at 5.5%. That's the variable loan interest rate, right? Obviously, it's dependent on, you see here, the Moody's corporate bond yield average, right? So this type of loan will not impact the dividend that's payable. Because, have you heard of a participating policy?
No.
Okay. So life insurance can and often does pay dividends. Life insurance is one of the only industries that have been paying dividends consistently for over 150 years. The only other companies that have been doing that are Black & Decker, Coca-Cola, and I think DuPont. Okay. So, even though they're separate insurance and investments, you can use it as an alternative to. Withdrawals and loans will reduce the available death benefit and policy value. So be careful when you're telling people, yeah, borrow from your policy. Because if you borrow beyond the basis, meaning what you've put into the policy, you can incur tax consequences. Okay? It says here, excessive and unpaid loans will reduce the death benefit and policy value and may cause the policy to lapse. So again, when you've got all these TikTok guys saying, hey, borrow from your policy, again, they're not trained right. Right? There's a lot of rah-rah meetings that you have from 8:30 in the morning talking about what the team's done, but there's not this focus on what's really in the policy. Okay?
So this particular policy does pay dividends?
It does, yes.
Okay. And you're saying that the interest rate was it's a variable rate, and this one is a variable. So
that's variable on the loan. You'll see the interest rate shortly.
Oh, that's on the loan. That has nothing to do with what it pays out. Okay.
Yeah, that has nothing to do with the dividend.
Oh, gotcha. Okay, no problem.
That's just loan interest. Maverick Capitalist, what's up?
Alonzo, scroll up to like the second page there.
This one?
No, like, let me see.
This is page 2.
Go up.
Because that's just
it's another page.
On the bottom. Okay. So obviously, your policy does give you the option to make changes while it's in force. You can change the dividend option. Okay. So as you can see right there, it pays dividends, right?
Yeah.
So, I'll show you that shortly in terms of how you can do the dividends. Surrenders of paid up insurance, change in dividend options, loans, or addition and deletion of riders. Okay. You also have things like a modified endowment contract, which now your insurance policy is not treated like an insurance policy. It's treated like an IRA. Okay. And that's if it fails the 7-pay test. Are you familiar with the TAMRA 7-pay test?
No.
Okay. If you can pay a policy off in 7 years or less, you failed the 7-pay test, and it will no longer be treated or taxed like life insurance. There's actually an article Charles sent out. The Democrats right now are going after traditional whole life insurance because it's a tax shelter for the wealthy.
Okay.
Right? Like I said, I'll gladly do joint work with you if you want, somebody who's fairly adept in setting these up. And then, once you learn it, you can kick me to the curb. All right. So this policy is eligible for annual dividends beginning at the end of the second policy year. Dividends are based on the company's year-by-year experience, which depends on items such as the general interest rate environment, the amount of and timing of benefit claims that the company pays, so on and so forth. Dividends increase the value of your life insurance policy in one of two ways, either by increasing your cash value and or the death benefit, or reducing the out-of-pocket cost of your policy. So as you can see, there's a few different options, right? Most often, agents just do paid-up additions. We don't even get trained on anything else.
Got it.
Right? You can leave the deposit to accumulate earning interest. You can actually get the dividends sent out to you in a check. You can actually have it applied to reduce your monthly premiums, or you can have it purchase term insurance for you. Most of the time,
hey Alonzo, in the interest of time, let's go to the ledger page. Carlos can print this out and read it. But like if he's with a client, right, you want to go to the ledger page. Yeah, there's the numbers there. This actually shows you the dividends and the cash value.
Yeah.
And then with the time left, Alonzo, you can add the riders and because the Care for Life rider is not on this.
Yeah.
So this is the ledger. Like if you were the client, this is the page that because the clients will see where's the numbers, right?
Yeah. Yeah, most of this stuff, the rest of this stuff, the client is never going to read, but you need to make yourself familiar with that so that it's like the back of your hand. As you can see, the guaranteed values and the non-guaranteed values. Non-guaranteed values are what's happening right now. Guaranteed values are like FDIC insurance. So if the company goes bankrupt today when you buy the policy, we got you covered all the way until you're 99. until you're 104. This client has no worries until they're 121. So if she got this policy today and this company went bankrupt the next day, we still have enough money to make sure that her $100,000 gets paid out until she's 121.
Can you explain that non-guaranteed value? Non-guaranteed, what does that mean?
I can't tell you what the market or what Moody's or anything is going to do from today to tomorrow, so it's non-guaranteed.
Well, Carlos, what that means is the dividends are not
guaranteed. Yeah.
The
So you have
okay.
the dividends.
The cash value. Gotcha.
The guarantees like contractually in the policy.
Yeah, I see it.
There's a
I've seen that
contractual
before.
guarantee on
And I've
guarantee.
seen that before. That's why I was just asking.
Yeah.
I've seen it before. But okay, now I know what it means.
The guarantee, the dividends are not guaranteed, but they've been
But the
paid
cash value is
historically.
guaranteed.
Yeah, the guaranteed cash value. That's the worst case scenario.
Yeah.
No matter what on that guaranteed time, that's what you're gonna get.
Yeah.
So she keeps this policy for 10 years. She has a cash value built up of 23,500.
Guaranteed.
Tax
But
free,
and she's paid.
and she can pull that out tax free.
Right.
And she's paid into the policy. Well, in that year would have been
34,000.
34,000.
It tells you right there.
well,
Yeah.
but if you do math, right?
Mm-hmm.
34,651, and then we subtract the 23,601. She's actually paid $11,050.
Right, exactly.
Right?
That's great.
Yeah. So it ends up almost being cheaper than a term.
Sure. She's paying less than, 10 years, she's at like a little bit over, what is that, 1,000, little more.
A little over $1,000 a year.
A year. Which is great. Wow, nice.
Yeah. So even though out of her pocket it feels like 3,400 came out, when you do the math at the end of 10 years, only 1,100 a year came out. Because we stacked this money to the side for her. Now again, like that dividend, because the dividend is growing and we have it buying additional insurance for her, so her death benefit grows.
It went up a little bit.
Right. And as time goes and your dividend continues to balloon and your cash value begins to balloon, again, at her age, it's going to be hard to break even or catch up.
Yeah.
Because unfortunately, there's things like the cost of insurance and so on and so forth.
Yeah.
Right. So real quick, we'll just show you a rider. Right. So when you want to add riders.
Any questions real quick?
No, I got it. It's pretty clear.
Okay. Again, the waiver of premium can't go on because of her age. Accidental death benefit is an option. Guaranteed insurability can't go on due to her age, but if you'll see on scheduled dates, you have the option to purchase a new policy on the life of the insured without evidence of insurability. So these dates are the annual dates nearest to the insured's 22nd, 25th, 28th, 31st, 34th, 37th, and 40th birthdays.
That's great if you're doing a child or grandchildren to put that rider on.
Okay.
Next, you've got children's insurance, which is an heir additional insured. This rider provides a death benefit coverage for the children. They're assuming at 64, she's got no minor children. One rider that I like to use is the term perm blend, right? So this is where you can have a permanent policy, but let's say she wanted 250. Let's say again she wanted the 200,000, right? So we do a 10-year term. So we do from age 64 to 74, where she'd have an additional 100,000, right? Also, the Care for Life acceleration rider. Let's take a look at that. So this rider allows a portion of the death benefit to be paid upon certification of certain medical conditions, right? So that's terminal illness, meaning 12 months or less to live, chronic illness, meaning you can't perform 2 activities of daily living, and critical illness, things like end-stage renal failure or blindness due to diabetes.
Check that rider. Because that one is no cost, and that's not available on the term.
Yeah, that's not available at all.
On the term, you just have the terminal illness. So that Care for Life, that covers
all 3.
A lot more, and it's free.
Okay, so now if we have a level term added and we click preview, I wish I left the other illustration up, but we don't need to compare apples to apples. So this, as you'll see here, right up top, there's that Care for Life benefit. So right off the rip, a terminal illness, up to 75% of the death benefit tax-free. A chronic illness, up to 50% of the death benefit tax-free, and a critical illness up to 25% of the death benefit tax-free. You've also got the cash value that's going to grow, and you've got the death benefit. If you'll see here, the death benefit is $200,000, even though initially she's only applying for $100,000 whole life. So it did increase the price a little bit. It's $337 a month for the first 10 years. And if you'll see here, it's a $200,000 death benefit for the first 10 years, right? Now, year 11, it drops. So that price drops, right? Let's see, what's 3465 divided by 12? So it drops down to 288. But the death benefit drops down to 100,000 as well. But she's still got the cash value growth and the dividends that are still growing, right? So as time goes, this policy continues to grow with her. Okay. Now, again, we can get into the weeds of the different types of policies because there are some that I like more than others. I'm an IUL guy. That by no means does that mean that you should be an IUL guy. One last rider, and then I'd like you to share your screen and try to illustrate. So the next thing is...
Carlos, we still have enough time. I know we put aside an hour, so I know
I probably, since I didn't register yet, it's probably... I'm probably gonna have to end up doing that on my own, but it's okay.
So
next time.
Last, you've got the flexible paid up rider, which is how you can increase their cash value. So you have to schedule. Let's say she wants to pay an extra $200 a month, and she wants to pay that for 10 years, right? Yep. And then process, right? And it'll show you here. Well, let me return and preview.
And this is for your clients that say, you know, I'm more concerned with the cash buildup.
Yeah. This isn't for someone her age. Yeah.
I want to take advantage of the dividends because I don't want to pay the taxes. This is what the Democrats are trying to
knock out.
Because you can max this out and clients as little death benefit as possible, but then you can maximize your you see how the cash value jumped. You know, from 23, it's now 50,000 in year 10. But yeah, they're paying more money, but this is the client that, you know, they have it, they don't really mind, they just want to take advantage and have that, they could pull this cash out, you know, tax-free.
Wait, where did the cash value go from 23 to 50? What
so here it's 23,000 in this illustration.
Right there,
You look at this illustration, it's 50,000.
This is where adding the rider to the same contract.
So we added that additional rider.
The policy, they have the paid up value, right? What is it called? FPUR stands for what?
Flexible paid up rider.
Yeah.
Oh, flexible paid up addition. That makes sense.
That's when you would a client say, hey, I want maximum. I want to maximize my tax-free retirement portfolio.
This is for your business owner clients.
They could pull out $50,000, and you're saying it'll be tax-free by just paying an additional, what was it, 200 something a month?
Right, an additional 200 a month, right? But that ballooned her cash value, and if you'll notice, it also ballooned her death benefit. In this illustration, it's a $200,000 death benefit, but that's with the additional rider of this is $100,000 a term and $100,000 a whole life. Here, this is $100,000 a whole life, and in the first year, it's $105,000. Year 2, it's $110,000. By year 10, it's $144,000, and she's only paid in $58,000. But again, if we do math and we go 58,651 minus 50,060, she actually paid $8,500 in total over the course of 10 years. So she paid $850 a year for this life insurance.
Nice.
Right. Now, again, someone her age, it becomes difficult, especially with those lower premiums. If she's looking to spend, you know, a few $1,000s a month, then you can actually do something similar to this with her. But at her age, you know, she's probably price sensitive, likely on the fixed income, right?
Sure.
So you may have to do like a value plus whole life with a small face amount of, let's say, 20,000. Because you're also going to want to get into, again, like I said, we're field underwriters. So we need to understand what product we're trying to put our client in. So I'll stop there. I'd like you to share your screen and see if you could just do a simple, either a term or a whole life illustration, whichever one you choose.
Can you do one more?
Any questions before we do that? Because I know Alonzo, he talks like he's running the sprint.
No, I got it. It wasn't too bad.
Take a drink of water, Alonzo. Slow down.
I got you.
Can he go back to see if somebody's working on a budget, and then to see, let's say they were looking to spend, I don't know, let's say $120 a month or something.
Yeah, we can do that.
Where would you do that?
So right here where you see plan design, right?
Yeah.
You see it says input face, input premium. So you click input premium, $125 a month, right? Let me remove some of these riders. So give me 1 second. I'm going to take the flexible paid up rider off. I'm going to leave the care for life rider. All right. And then you preview that.
And you can also do a quick calc, Alonzo. So you can show them how to do
the quick calc, yeah.
So that way you don't. So if you're just trying to get a quote real quick.
So you just click quick calc. And it'll tell you right here, it'll give them a $41,000 death benefit.
Oh, okay.
That's when I'm doing the full illustration, so you can just see.
Oh, good. All right. That makes sense. And the age of the person was already inputted in the first part. Mm-hmm. All right.
So here you can have the whole illustration, and you can look at the meat and potatoes of the numbers, right? So you can see what they have. So again, $1,500 a year. You're going to get less than a $50,000 death benefit. But what you want to do is familiarize yourself with the underwriting guide, and, see which policy fits best for the client. In this situation, you're looking at a value plus if you're looking at a whole life. But there are a multitude of different types of policies.
It just depends what your client's looking for. Everything from a high death benefit to high cash value. Just depends on when you're doing your needs analysis with the client, you'll know, what the client is more interested in, low cost or, they don't mind spending more money to maximize the cash value buildup.
Like this value plus is a low cost, right? If we were to go to the others, like my favorite of them is the growth, but that's a higher cost. But that, again, for this client, I wouldn't recommend because at that age, they don't have the time for growth. It just, from statistic, people at 64, maybe they'll live another 25 years, but maybe they won't. Hey, maybe I could have died last night, but... Sorry, go ahead.
What would be the calculation on something like that?
A quick calc on what, a growth?
Value. Yeah, just out of curiosity, what is...
Let's see. So if we do everything apples to apples, a quick calculation on that will be a $33,000 death benefit.
Okay, so it's not.
But this is more heavy on the death benefit.
Yeah.
Okay.
I mean, not the death benefit.
Cash value growth.
This is on the cash value, not death benefit. You see the cash value jumped up.
Yeah. So the cash value on these is a little more aggressive, but it's a little more expensive than a value plus.
Got it.
Right? Which is why the death benefit is almost $10,000 less than here.
Got it. The cash value. Okay.
But the cash value is going to be more.
The cash value is going to be more aggressive.
I see.
So those are those types.
This helps a lot. This helps a lot. So when I go on there, I'm not blindsided.
Oh, you haven't registered yet?
Yeah, I still need to do
I just sent you the link again to register.
Well, I appreciate the help. That's helped me a lot.
Okay, awesome.
Oh, I think I see Vincente was actually on. I see him in there.
Yeah, he came in.
You're just silent. Hi, Vincente. Do you have questions, concerns, comments? Are you registered yet?
Can you hear me?
Yes.
We hear you.
Right. I was calling Carlos because I remember he told me yesterday to get ready for the 1 o'clock. We were going to install, or Mr. Charles was going to help us install our system so we can start writing. So But when I opened my laptop, I saw this Zoom going on. So I said, well, let me see if I can listen to something. So I was listening to it, very educative. And well, I'm just calling Carlos again to see if he's ready.
Yeah, we could do another one because there was a lot. We just went through really 2 products, value plus term, and then there's the growth. Like got the access, right? Then you got the IULs, and then okay, how do you get to how do you submit the application, right?
Right.
The electronic application. So we could do some more workshops on this. All right. I know we said it's like an hour now, but the 2 of you have to register.
Yeah, I have to register.
Yeah, you have to register. That way you have access now, to the portal. You can go in there and start playing around. And, if you have a quote, I can help you with a quote. There's that 800 number, that sales support number. Like if you can't get me, they can email you illustrations.
I'll show you the 800 number.
And they're very good. All right.
Here's the 800 number.
So I have a question. So once let's say we do the illustration, they want to go with one of the products. How do when do they sign the contracts? Because when
that's an e-apply.
Huh?
That's an e-apply. Remember those first few screens that I showed you?
Well, the first thing is the worksheet, Alonzo. Show them where to get the worksheet.
All right.
You have the worksheet. You can go to the search bar and just type in e-apply worksheet.
Yeah, actually.
E-apply worksheet. Okay.
So then this is the information you need to gather for the electronic portal. Have the one for New York.
Yeah, here you go. Yeah, you guys are gonna need the one for New York, unless you're licensed outside of New York. But as New York goes, the rest of the country goes. So anything that New York does, within 5 years, the rest of the country is gonna be doing what New York does anyway. So you might as well just do it like New York all the way through.
This is the information you collect, and then this gets transferred to the e-apply system. So it's best just to work on this. This is fillable. You can type it in while you're with the client, and then there's this collects all the information that you need to submit in the e-apply, and that's a whole nother session.
Okay, all right. Just at least we got through
But
understanding.
for now, you can do the illustration, get the e-apply worksheet, and then from there is put it into the system.
Got it. Okay. All right. That's fair enough.
That's best because if you go to e-apply and the first time you did, it gets stuck.
Yeah, it gets stuck. I do it live time all the time, but I don't recommend that.
It's better just to collect the data on the worksheet and then go to the e-apply.
Collect the data on the worksheet, then go to e-apply. All right.
Yeah. This way you can type it in at your leisure. And then just like I know with Combine, once you finish, you send them the email. It's the same thing with e-apply. Once you've completed, unless they're in your face, you can actually send them the email. And when we get to that point, we'll show you how to do that as well.
Okay.
All right,
everyone. So Carlos, let me know when y'all want to do this again. All right.
Yes. Yep.
Okay.
I'm actually free tomorrow. Not tomorrow.
I was about to say, no, we're not free tomorrow. We're gonna be in I was gonna sign up for a class tomorrow, but I realized I was like, oh, I can't sign up for that class because I'll be in New Rochelle.
We'll be free again Thursday and Friday. Just let me know.
All right, sounds good.
But in the meantime, at least right now today, register for the producer workbench. At least do that.
Yeah.
All right?
Got it. All right, perfect.
All right, everyone. Thanks, Alonzo.
Thanks, Alonzo. Thanks, Charles.
Later, guys.
Take care.
See you guys.
All right, folks. So that was me just showing some of the training that you have to do. Again, most of the time you're not going to get that kind of training because the agents aren't going to be willing to sit there and do what I just did. Unless they know that you're under them writing business or you're willing to split the business with them, which is why I told the guy, hey, listen, you do taxes, sit me down with some of your clients. He's not going to want to do that initially. A lot of people don't want to do that. They'd rather keep all the money, which is fine, but you don't know what I know, so you're going to keep money and you're going to leave a lot of money on the table. Like I said, 50% of a watermelon is substantially more than 200% of a grape. So greed will actually kill you in a lot of situations, right? I have agents who are totally understanding. Listen, I don't mind giving you some of the commission because I don't know what I'm doing. So if I try to keep it all myself, not knowing what I'm doing, guess what I'm going to get? Zero. 1,000,000% of zero is still zero. Guess what 50% of 2,000 is? 1,000. Which would you rather have, 1,000,000% of zero or 50% of 2,000? I'd rather have 50% of 2,000 than 1,000,000% of zero. So those, again, ladies and gentlemen, are some of the things that you as a consumer probably don't see from behind the scenes that financial professionals have to do, especially when you're in the management capacity, because I have to teach agents who have years of experience how to navigate the software. And the problem is that a lot of agents come online and they talk these concepts and they don't know how to navigate the software or how to manipulate the product to your benefit. So they're telling you do things like infinite banking, do things like buy term, invest the rest, do things like this, and they don't even know how the fuck to do it. But you as a consumer don't know that. So then they walk through and they don't know that things like, how are you in the industry for more than 5 years and never known that cash value life insurance pays dividends? Because you weren't trained to know that. Right? It's just like the military, in certain war-torn countries where they go kill up people. The only reason they do that is because they're taking orders. But anyway, ladies and gentlemen, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance broker, and I just whapped and tapped on your head with another ADH wealth solution. If you enjoy the content, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. And remember, folks, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute. CWP, what up? I think I'll be going over this book with y'all next. It's funny right here. You see what he says? Wealthy people use OPM, other people's money. Top 25 ways an IUL can secure your financial future. and build a tax-free bank. Why don't y'all know about this? In fact, hold on, while I'm at it, let me turn on my computer. Turn down this music just a little bit. Because I just want to go to this article. Democrats. Against life insurance. All right. While I'm at it, look at this. Democrats blast high-end 6 days ago, 4 days ago. Democrats blast high-end life insurance plans as tax breaks for the rich. Wonder why they keep telling you to buy term policies. Why? So they can stay rich and you can stay poor. So you can have less and they can have more bars. AOL.com, Fox Philly, an insurance policy for Democrats. Well, why? Let's look at The Hill. I just did an article on this. Right? So Democrats on the Senate committee took aim at private placement life insurance, saying the specialized plans amounted to tax breaks for the wealthiest Americans. Hold up. What did I just show y'all? That this guy just said in this book, which is why she'd be telling y'all, come see me. Nah, I'm not the most vocal on the internet with it, but I'm the most true. I'm the most real about it. I'm probably the most knowledgeable about it between some people I've seen, besides my man Deontay Blade Ford, right? But what does this say here? It says, an IUL can help grow your retirement accounts and help protect you from running out of money during your retirement years. The wealthy use OPM, other people's money, in all their investing, and how you can, right? Or excuse me, and now you can too. So ladies and gentlemen, with that being said, wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. And remember, folks, when people challenge you, yeah, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Champions.